Tesla just reported their second quarter earnings, and I think investors need to watch out because there's really a strong potential that Tesla stock resets much lower from here. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. A quick context looking at Tesla. I mean, over the last 3 months, the stock did rally over 70%. This is before they reported earnings. And then as their reported earnings, currently after hours, the stock is down over 6%. And I think it's justified based on the fundamentals. Honestly, I'm surprised it's not dropping even more. And I'll talk about that why in just a second, but let's look at these fundamentals. I mean, automotive revenue down 7%, energy and storage clearly taking market share. That is a bright light in terms of their business, up 100%, but still relative to their automotive, it's much smaller, 3 billion versus 20 billion. So 100% growth versus, a 7% decline in automotive, which is $20 billion. It's not enough to really get the business to where you want it to be. And so all in revenues were only increasing 2%, underlying profitability down year over year. If you look at EBITDA, down 21% year over year. They did improve their free cash flow, which is what I like to see. Last quarter was a burn. Now they're looking at back to positive free cash flow, which is, cash burn does make investors nervous. So it's good to see that. And looking at management commentary around what's driving these results, you see, reduced pricing on their S, the 3, X, and Y, their sexy vehicles. Also, a decline in vehicle deliveries. And despite, I should say this is a good thing about Tesla, which is, so you do have these headwinds, but a good thing is that, look, they're generating free cash flow, even though it was offset by significant investments, $600 million in AI infrastructure in the quarter. Now, I look at the business, I look at the matte black Cybertrucks, and I'm like, man, that is a sexy beast. It's like a modern day Batmobile. But the underlying challenge is that the Model 3 and the Y deliveries down 5%, the production down 16%. So it does reflect like maybe tougher competitive environment. Management did, Musk did touch upon that during the call. This is arguably a challenge, and seeing the market share also dip, that is a red flag. Now, normally in the prior years, this is exactly what I want to see. A business that's slowly but surely taking market share. And this is their market share in different regions like China, Europe, and North America. But you have noticed that now for the last few quarters, it has been coming under pressure. And so when I see a company report, weak sales, then I go, okay, well, if it's weak sales, but they're keeping their market share, then that's okay. Maybe that just is a broader industry issue. Maybe you had a lot of stimulus, post-COVID, and then people are sort of, taking a little foot off the gas pedal, a little foot off the electric pedal. And now when you're starting to see market share losses, that's a little bit of a different story. That suggests tougher competitive dynamics that investors, should, pressing that brake pedal, being mindful of, okay, this means something else. This means you're going to need something else in the business to either a leapfrog in product quality, so that way you start taking market share, or just completely disrupt the business, which is possible. Elon is a hyper competitive person. Incredible biography if you haven't read it, by Walter Isaacson. And so, if someone can do it, it is Elon Musk. But that said, it is a super tough challenge to sort of reverse this trend and to start seeing, let's say, that market share begin to creep higher, where they are actively taking share. And the challenge is that you can't post a 2% sales growth figure when you're trading at an 8 times price to sales multiple. That's just not acceptable in my mind. That's a huge disconnect between fundamentals and valuation. And that creates a real risk of a reset for investors, because that is like red meat for the hedge fund community to say, whoa, only 2% sales growth and an 8 times price to sales multiple. They're thinking, this is only going to attract more and more short sellers to say, okay, let me consider betting against, Tesla, because if you're only growing 2%, how much further can the stock rally from here? Because really, at this point, unless the fundamentals suddenly reverse course and suddenly start accelerating, you're really talking about, hey, it's just valuation expansion that's the risk. And at 8 times price to sales, and you can see over the past year, that's near the high where it's been for the past year. In prior years, it was higher, but that was, partly because they were growing even faster. So this is this is the red meat for the short sellers. Wouldn't surprise me to see more pressure, and Tesla is responding to try to juice the market. Recently they started talking about, look, we do have available, affordable financing for Model Y trims of 1.99% APR through August 31st. So they're doing the things that I'd argue you need to do to start juicing demand. Started to see advertising in the last year or so, starting to see, attractive financing opportunities to get people to say, hey, go out and go buy yourself a Tesla. And honestly, even hearing the management on the call, it almost reeked of desperation. Like they were like, yeah, go out and go buy your car right now because the rates are affordable. So they're clearly trying to squeeze it, trying to squeeze that orange and get some drops out of it. So the question is, where does, Tesla stock go from here? First of all, in full disclosure, this is not financial advice. You're watching Unrivaled Investing. Also, quick plug, recently, Robin, a premium member of Unrivaled Investing, commented, this is a direct quote, "I'm an extremely happy customer of Unrivaled. The information services you provide to me are invaluable." That's a direct quote. This follows another subscriber posting on how, another direct quote, "I am currently ahead of my investing goals to retire at age 45, thanks to Unrivaled." So if you're looking for compelling investment ideas, I do have a weekly letter, exclusive monthly video for subscribers where I'm sharing ideas, sharing my own personal portfolio. Check that out. I also do have educational materials if you're interested in learning how to value stocks or, assess financial statements. So I think looking at Tesla, based on their current automotive business, I think the underlying stock needs some sort of Hail Mary to really get it going from here, because seeing a 2% revenue growth just isn't it. So they need something, some sort of paradigm shift to say, like, look, this is a whole new business now. This is a whole new opportunity that can get this, we're going to tap into a much bigger market. Sales will start accelerating, and that's why it's going to be much bigger. And I think the sources of that potential, and I've talked about this before in prior Tesla videos, one is full self-driving, Elon Musk repeating his message year after year after year that, hey, it's just going to be next year that we get this super amazing full self-driving. So maybe it's next year where that's the game changer, where you have the robotaxi. And, even on the call, he was talking about how it was delayed a little bit because it wasn't quite there yet. And another potential Hail Mary for Tesla is the investments in AI training. And they're talking about looking at Optimus and hoping to have Optimus roll out to thousands of units in the Tesla factory next year. I think Optimus is super awesome. I know Elon Musk is also a fan of Westworld, so it wouldn't surprise me if this accelerates the time frame of Westworld coming to a world near you. So I would love to see that personally. I think I'm a white hat sort of guy. Let me know what type of, if you're white hat or black hat, in the comments below. But the reality is he's not going to be the only player. If you check out, there's Twitter or X, another product owned by Musk, where there are tweets from a company called Clone. And honestly, I'm just stunned by some of the imaging of, the Android work that they're doing in terms of the hands. And there are other players. So it's not like Optimus is going to be the only one. Clearly, a lot of people are looking at competing in this space and creating intelligent robotics, thinking about the valuation. I go to AI Ticker Chat. I go to the AI Predict feature to, once again, leverage artificial intelligence to take a stab at where it could be in the years ahead. It's not always perfect, but it does give me a first guess, where it could shake out. It does include Wall Street estimates, which I can, click here to see how the estimates compare to Wall Street. And overall, it's not that compelling. And that's the reason why I like to use AI Predict. I'm one of the co-founders of AI Ticker Chat. But, when I look at AI Predict, I'd like it to jump off the page, to say, hey, there's something maybe compelling here or not. And so that's where I use it for personally, of sort of just an acid test. Is there something, worth diving further in? Maybe I want to check the assumptions here. But broadly, it doesn't look that compelling when I, tweak the assumptions myself, to say, hey, maybe a little bit better growth prospects, maybe 10 to 20% annualized growth in the years ahead. So that does assume sort of this reacceleration in the business. Maybe that's via robotaxi. Maybe that's via, getting Optimus, more mainstream where people can start selling that. So I'm going from, let's say, 5% growth currently to 20% annualized over the next 5 years. That gets from a business that did under 100 billion in sales last year to 240 billion in the next few years. I'm assuming 20% margins, 40 times multiple. So that is I'm giving benefit of the doubt because partly because investors just love Elon Musk and sort of have faith that he will deliver that 40 times multiple. Even assuming this sort of range of possibilities, it doesn't even get over 100% upside. And so that's what gives me pause, and if I do a more conservative take, then I'm talking about down like 70%. So I'm just not seeing a setup that jumps off the page where I go, okay, I want to, this is worth buying or worth investigating more. I do like, the promise of Optimus. I do like the journey that Tesla is on. I personally would love to make it, part of my own personal journey at some point. But just at this price, after this run up, it would not surprise me to see Tesla stock reset significantly in the year ahead or in the months ahead, just following these results. I mean, just a few months ago, this was trading around 130, 140. Would not surprise me at all to see it back there. But we'll see. If you have a different take, I'd absolutely love to hear it in the comments below. Thank you so much for tuning in to Unrivaled Investing.